Hello, everybody. So today I want to briefly comment on the $1 billion raise that HIMS completed now fully complete at 0% interest rate. That is quite stunning, and in a typical HIMS fashion, the day after this beautiful conclusion of this raise, of course, the stock is down about 4% right now in a typical HIMS fashion, but you gotta zoom out, right? The performance has been very much outstanding year to date, and the performance 52 weeks has been even more outstanding. We're at about a 4x in 52 weeks performance. Anyways, what's the point? So, they raised $1 billion. That's more than double what they wanted. So this is significantly more demand for the stock than during the SPAC early days. A portion of the investors are starting to get the story of HIMS. At least the convertible bond investors are getting that portion of the story. The offering is about, of course, long-term value creation while minimizing shareholder dilution. That's the capped calls I told you about 2 days ago. They got the capped calls. So that means that any dilution beyond 89.95 will be accounted for via the gain of the value of the capped calls, or that's how it works under the hood. I'm not an expert in convertible bonds, but anyways, buying the calls when you issue the money allows you to make sure that you don't get too diluted. This is very cheap debt, by the way. This is great, 0%. But point. Anyways, is what are they going to do it? They're gonna use that money for what? For the global healthcare platform that they want to build, easy to use, affordable, built around the individual, and more importantly, it's about that international vision, which is what we're going to talk about today, and a little bit about personal care and investing in the AI, which they're already doing, and of course, this $1 billion is the way for them to accelerate. The foundation is in place. Now it's time to accelerate with the $1 billion that they raise. And of course, when I think about that, I think about copy-paste. Copy-paste is the feeling that comes to mind. And this is where I'm going to talk about the UK, because did you know that HIMS has HIMS has a mini HIMS in the UK called forhims.co.uk, where they essentially operate an early days version of their early business in the United States, right? So that's forhims.co.uk, and that website is essentially where HIMS was 6 or 5 years ago. So they only do air loss, they only do ED, and it looks like they're starting to do some skin. But look, this is all in British English, right? GP, I assume that means general practitioner. UK license, letterbox, right? That's not how we say it in America. Anyways, this is all very British. If you look at the prices, £21 per month. That's very British too. And if you look at their, side operation, their little side business in the UK, their copy-paste of the US business from 5 years ago, look at the reviews. 4.59, more than 1,000 reviews, including recent reviews, right? These are not old reviews. People love it. And keep in mind, healthcare is one of these fields. Look up your local hospitals. Look up the reviews of your local clinic. Healthcare is one of these fields that usually never gets past the 4, and they get a 4.5 on HIMS. So people love it, if there was any doubt, right? But the revenue growth doesn't lie. When you grow 111% year over year, that doesn't lie. It means people love it under the hood. But anyways, that's the copy and paste. And my guess is that they are going to copy and paste the early days version of their website in different regions of the world, in different areas. And of course, I think the next logical market would be the Canadian market. And so could they go after a Canadian copycat? I mean, it's nothing. There's copycats of HIMS all around the world. Like a bunch of businesses try to copy HIMS. It's all over the world. You're gonna find a little version of that. Maybe less in Europe, but at least in the English speaking world, you find a lot of copies of HIMS. One of them that I found that's I think a very similar copy is Jack. So Jack is the Canadian equivalent of that. I have no idea how much that would be worth, but I'm pretty sure that would be worth way less than $1 billion. And how do I know that? Because a stock that I've analyzed before on this channel is Well Health. Sometimes comes up when we talk about HIMSS. Of course, very different business. They actually own physical clinics, and they have a records company. Different business. The point of me bringing up Well Health is you can see the market cap. It's $1 billion. It's $1 billion, and $1,067,000,000 is the price of this company in US dollars. So this company is, well, actually that's Canadian dollars, my bad. In Canadian dollars, $1 billion Canadian dollars. So you can technically acquire a company like this. With $1 billion, you can acquire a lot of a business, right? You can acquire a lot of companies. I hope they keep the acquisitions small and cheap. And I much prefer them to use that money to copy paste with engineers. But if they need to do an acquisition, they can. And of course, the big market that everybody thinks about is the European Union. Lots of people, 450 million people over there that you can sell to. I include the UK in there, but the UK is not part of the EU. But anyways, they're already in the UK. The UK is already going to be a big operation. But how do you enter the EU market? Well, this is where I think it gets complicated. Is how do you get around like disparate insurance system? Well, maybe they entirely do away with it. I have not found, at least in France, and I did a little bit of research in Germany as well, but I don't speak German, so it's a little tougher. But I have not found in France a business that uses the HIMSS business model where you actually don't use insurance. But for example, in France, I'm pretty sure they could, because a doctor consult is out of pocket between 25 and 35 euros, depending on the region. So in France, I'm pretty sure they could compete entirely out of the healthcare system, just offering some consultation for, I don't know, ED or whatever for like $19. I'm pretty sure they could do something like that. In Germany, I don't know how they could do it, but in Germany, it seems teleclinic seems to be like one of the bigger businesses. And again, I don't speak German, but I think they use the whole German healthcare system. So in that case, I don't really know. If you're gonna use a lot of the healthcare system, frankly, if you look at all of these companies here, they're closer to copycats of LifeMD. They are closer to the LifeMD playbook than they are to the HIMSS playbook. In other words, HIMSS would be particularly disruptive in the EU. And the last thing I want to say is there seems to be this UK company, Health Hero, which owns a bunch of disparate websites like that in Europe and do business like that in Europe. So point of this slide, there's no lack of candidates to be acquired by HIMSS potentially, and of course the valuations over there are much cheaper than in the US, right? $1 billion is going to go a long way over there acquiring companies, especially these companies are public. The valuations tend to be lower. So I do see a major opportunity for HIMSS to go international, but of course that's going to be a long-term story, right? The stock, in my view, next year still gonna trade with the lows and the highs of a GLP-1 story, unfortunately, because that's how the market judges HIMSS. Let me conclude with LifeMD runs, right? That's the other part of the title. A question I ask myself all the time, and yesterday, I was on X yesterday and I made the point, well, you know what, actually, LifeMD is cheaper right now. LifeMD is a better buy. Well, guess what? I don't know anymore. Now LifeMD is up almost 10% and HIMSS is down about 4%. So now I find HIMSS to be roughly the better buy. Because if you look, now HIMSS is only twice more expensive than LifeMD. Yeah, 2 days ago, we were closer to LifeMD being 3 times as cheap as HIMSS, 3 times cheaper. So in my next video, I'm gonna work on this. In my next video, I'm gonna work on a pair chart and looking at how this pair trades. I think that's gonna be quite interesting because they're gonna trade at a multiple of the other, and it's gonna be interesting to figure out which one is the better buy. Telehealth is a revolution. Healthcare is gonna change, right? Look at United Healthcare, right? The stock isn't really recovering right now, is it? Huh? Look at United Healthcare. So healthcare is going to change. The cash cow is going to be taken over by tech. HIMSS is leading this crowd, right? HIMS is leading the way. But that doesn't mean there's no room for a smaller player with a slightly different business. And frankly, for LifeMD, I find them more advanced on some things like LifeMD Plus, which I find very compelling. And I would most likely pay $19 a month for LifeMD Plus if I didn't have access to a doctor daily, right? So, anyways, it's pretty crazy. So that was it for this video. This was not investment advice. This is not financial advice. This is only entertainment. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.